Hey, what's up? So this is my review for November 14th, which is Wednesday, 2018. It's about 7:20 in the evening. Looking back over the charts in the trading that I did today, overall profitable day, second day in a row. So really, when you're starting this out, you just want to string together a couple wins, a couple winning days. We did have a losing trade today, but we also had a winning trade with keeping our stops tight and our winner targets where they needed to be. Then you end up being profitable. So I like the idea that we're sticking to that 15 for that first target and then 20 for the second, or runner for the second. So today I bumped it up to 2 contracts. I wanted to make sure I'm used to managing that second contract, even though I had been kind of pretending before. I wanted to actually put it into practice. So stepped up to 2 contracts today, and we'll trade 2 contracts the rest of the week. So this is kind of what I walked into this morning, about 6:50 in the morning. Here's what the markets were doing. This line for me was red at the time, so a perfect 2 try, 1-2 above this prior high swing, just sell back in. But of course, it happened at 2:30 in the morning, so not a ton you could do about that. So I marked that as white, and then this one would become red, so it was a point of interest today. And then this one was also red when I came in. It hadn't got to that level yet, and then you can tell this one is still green, so it hasn't been used yet. So this is what I started with, so we'll just jump into it. I have my markers on for the trades that I did take. We'll just kind of walk through the market here, kind of replaying it as we go. So this move here, I started to eye on this white line up here. So that was kind of my target. I wanted it to get above the moving average and then pull back to get that nice pullback and make it a 1, and then up second leg right above that little level to sell it back down. What it did do is kind of not what I like. It's just like it tested it. It didn't even close really even near it. It just fell down and then fell right back up. So I went ahead and counted it as a 1 just to see what we would get. We ended up getting a move above that level, and it was just a strong move, and I didn't really get the pullback I'd like to see, so I let that one go. So this actually needs to be removed. The very first level I was actually looking at was this 1-2 try down. I was trying to get that trap below this level here of 92, but it never got quite that far, so let that one go. So continuing to watch here, we went ahead and took the short off of this white line here. So let me zoom out and see what that white line. That's that swing right over there, way over there, from yesterday near the close, or near yesterday evening. So that's what shaped up for us. I'm not sure if we had stochastics on this one or not. If you remember last night, I decided to kind of take stochastics off of the requirements list. I mean, it's still there. It's still an important factor, but it's not like the most critical thing. So that's why I went ahead and still entered this trade. So it continued to pop against us. So it looks like our entry point here was this 59, so that means 69 was our stop. So we had a little bit of room, and then we would move our stop to break even if it got down to 49, which it did. It got down to 49, so I moved my stop down to break even, and popped right back against me. So I got out break even, no problem on that. It continued to move higher, and then it finally collapsed. So this was kind of the story of the day, where we had the right idea, the right time frame, at the right inflection point, but the market decided to continue to go against us before it pulled back, and that's going to happen. And so that's pretty much the main reason why I like that rule of moving your stop back into, just in case the stock moves against you. So it did in this case. If I would have let it go, it would have got up to that 69 level, would have stopped me out just by a tick at -10, and then actually went my way. So even though it sucks to be break even, it sucks even more if it goes 10 against me and stops me out right at that last tick, and then goes 20 in the direction that I wanted to go. So it's all good there. Continuing to learn from that. So as the market pulled down, I was identifying this is a potential swing level and this is a potential swing level. So I was counting this as 1. We got a pullback to the moving average, so that would validate the 1, and then I was hoping that we would get a kind of a flush down here or down here, and I would kind of watch each level and see how it reacted to each level to decide which level I wanted to try to get in at, but it decided to go completely against us. I wasn't in anything, so it didn't matter, but and you can see it went straight up, straight vertical. Pulled back to the moving average, a nice pullback, so I marked that up as our one point here. Got a lot of different patterns kind of forming today. And then what I got what I saw as a 2. And so we had a major swing level here. I will admit that this swing level was a bit manufactured on my end. You do see the little bit of a tip off here. The problem with that, it wasn't a strong enough kind of obvious level that not everybody was using it. So the trade didn't work out. The trade went against us. Zoom back in here. So it went against us. I got in, I waited, I sat on my hands for quite a while because this was technically my entry candle, and I wanted to see how it reacted after that, and so it continued to move up. And I also saw this channel here, so I kind of wanted to get it up into this channel so that way we could trade it back down into the other end of the channel. So I was kind of trying to line up this horizontal level, this channel level, the measured move level, etc. And so I waited and waited and waited, and it pushed for me. It continued to push, and then it pushed even more. Almost pretty much ticked us out at 07. So we got in at 97, got me out at 07. It ended up pulling back, so I would have been looking for 87, which it did hit 87, so then I could have moved my stop down, but that's just the way it goes. It continued to fly after that too, so it would have been another 20-30 cents, which would have been no good. So looking back, and lesson learned on that one is we can't manufacture these points. It doesn't work. I think you can trade them as long as you continue to trade them. So that way, the ones that do work, you can get your plus 15. The ones that don't work, you continue to be stopped out at minus 10. So this is another one of those points that kind of was manufactured. And I'm just saying manufactured because it's not super obvious, but you can see that little wick there. So that was what I was using on this level. And the problem is, since I took the last one, this one here, I should have taken this one here, but I didn't. See, I would have been out my minus 10, but then I would have been at my plus 15, plus 20. So it would have easily been profitable in the long run. So it may still make sense to trade these kind of small inner swings that not everybody technically sees or uses, if you can continue to trade them consistently. And consistently, I mean, take the trade, get out at minus 10, get out at plus 15, let the winners run, keep adding up your profits that way. So it's kind of a mechanical thing where actually the more you use that strategy, the better off you're going to be, as long as you're sticking to those 10 and 15 targets, or 15, plus 15 minus 10. So another kind of frustrating one here, and this is an error on my part. So what I did, you can see we had the one, so we have a prior swing here and a prior swing here. So on this first one, I was going to see if we got the two try move into this one, or if we got the 2 try move into this one. So it ended up pulling down, it pulled back up, touched the moving average, and pulled down again. So that was my valid 1, 2. Although I don't like the range kind of grinding here. I don't want to get hung up in the details every time, and I want to take more trades and let the probabilities work out. But it was 1 and it was 2, so it fit that part of the checklist, which was the most important. So I got in here on this candle right here, but the problem with that is it didn't close below that swing level. I don't know what I was thinking, but I guess I was just anxious, and I jumped into the trade right here, and you can't see I got out at break even because it went up plus 10 from where I got in. So I got in here at 83 and it went up to 92. Actually, the rule is plus 9 is what I'm doing. So if it goes up plus 9, you move your stop up, because remember, if it's going to go 9 and doesn't go 15, the trade's not going to go your way, even in the short term. So anyway, it got up to 9, and then my stop immediately moves up because I've kind of automated that part, and I got stopped out right there. So it was like one candle in, up 9. Oh yeah, this is going to be great. Back down to break even, getting out. So if I would have waited, so this would have actually been the first close below the moving average. So I would have waited for this candle to close if I was following my checklist. I would have got in on this candle. So say I got in at a bad price of, let's say I got in at 78. I don't know what I would have gotten in at 78. So we were looking for 88 to move our stop. So there would have been our stop movement. And we wouldn't have gotten 15 until after this move. So if I got in at 78, I'd have to get out at 68. So we would have been okay. We would have had our stop down here at 68. We would have got our plus 15 and plus 20 in the trade. So that 1 cent, or that one rule of waiting for that candle to close and getting in 3 to 4 cents lower really made a difference in, $300 in gain. So that's a good lesson learned. These video reviews, I think, help me more than anything else, and I'm glad if it helps you at all. That's good. I'm going to be doing them whether they help you or not, because they help me immensely. So I'm glad to do them. So that was the third trade. The fourth trade. So far we've had 2 break evens and a loss. So technically we only had 1 losing trade out of all of those, which this one should have been a win. The other one should have been break even was fine, and then break even was fine. There wasn't anything I could do on the other 2. So we would have been, if I would have followed my rules, we would have been up, because we would have had the plus 15 here and the plus 20 instead of having the minus 10 on the 2 contracts before. But anyway, so what I was looking at this move here, and we have this kind of point here, or this point here. We're looking to close above that, and we also have this point over here. So we had a bunch of resistance up here, but again, it's kind of that like double top mentality where if it's touched it a few times, it's likely to kind of shoot through it. So I kind of stayed away. We also didn't get a 2 try here, so didn't see the 2 try forming, didn't take the trade. Again, this hindsight trading can be dangerous, because you're gonna say, well, why don't I just take that every time? The problem is I've seen it more often. The more times it hits that level, the more often it's going to shoot through that level. So anyway, just my 2 cents. All right, so here's my final trade of the day. So we had it pull back. We went under the moving average. We pulled back up here. We pulled back up again. We got really close to the moving average here, like 2 pennies away from the moving average. So to me, I took that as, if I'm going to get a flush down under this larger swing area that goes all the way back to here, where we had these 2 kind of twin tower candles, that was the stronger inflection point to me than this one with the 1 wick. So I said, all right, if I'm going to count this as a 1 try and 2 try, I need to get it below this level. So lo and behold, I didn't take the trade here, which actually would have, if I was just counting this as a 2 try, this would have been my close below. This would have been my entry. I may have gotten up 10 for my entry. We can see if I got a good entry. 66. Didn't get that plus 10. So I'd have immediately stopped out in this candle here. 66 down to 56. So I'd have gotten wicked out at the bottom, and I wouldn't have taken this trade. So I'm glad I'm glad I waited. And so what I did was get in at the first candle close, because I had realized my mistake over here of not waiting for the candle to close below the level. So I waited for the first candle to close, and I got in right away at the last, it was like the last 10 orders. I think I got into that candle, and then it ended up popping up just like we needed it to. We got our plus 10, or we got our plus 15, and we got our plus 20, I believe, or maybe I set this one just to hit at the moving average. I'm not sure. But it was perfect. It was exactly what we needed to be. Got into the move, got the entire meat of the move from here up to here, and then the market continued to pull back. So I guess on this one, there's not like a hard and fast rule of why I didn't take this trade here. Mostly because I was concerned about this 2 try failure. And so I said, all right, if it's not going to give me a 2 try, I at least need to get it down to this major area of support right here. And I'm just calling this a more major area of support because of these they're called twin tower candles, where it's basically a red candle, a fully red candle, followed by a fully green candle. That's a sign of strength. And so I knew there were a lot of buyers probably in here at this point. And so I knew that we probably would see some people come back into the market under that level to kind of defend their positions, and end up working out. I don't know how better to explain it other than that. It was just kind of an intuition thing where I didn't get the pullback. I needed to go further than it did before, and I guess to me it was worth a shot. So I guess my takeaways from today are always wait for that candle to close above or below that pivot area. And then you want to stick to your stops and targets, obviously. That's a key. And what was that last thing I was going to focus on tomorrow? I think it's going to be taking shots. I'm going to take shots when the shots appear. So like, this is a shot I'm glad I took. This is a shot I'm glad I took, even though it was a pretty weak swing point. This is a shot I should have taken. That would have eliminated the loss there and added additional winnings. And then this is a shot I'm going to take too. I want to see those one try, two tries a little better, I think. I want to make sure that those are pretty clear, and then focus too on these kind of three-tiered moves. I think the higher it goes, the more legs it makes, the weaker it becomes. And so when you see the one move, the two move is our bare minimum, and then when you see that runs again, that third move into another swing point, that could become even more powerful. You often don't see that though as clear as this is, where it's very clear: 1 to the moving average, 2 to the moving average, 3 fail. And that's a swing point that we identified. So I've been starting to journal kind of my thoughts going into the close and then going into the open. And then these video reviews are really helpful. I watch them in the morning just to remember what I was thinking about, the day before and what my issues were. So we'll see what tomorrow ends up like. So we had one essentially losing trade that we turned into break even. Two losing. The second one was actually a losing trade. This one we turned into a break even. This one was a winner. So with all those combined, it was still positive on the day, which is solid, which I like that a lot. So the thing is, we're still at the inflection points. We're at the inflection point here. Yeah, it was a little early. The market kind of didn't know what it was doing and pulled back without us. But our rules helped us to be break even. We're down here. We're buying long right before it makes a huge move. So we're in the zone. We're in the right areas. We can continue to tweak and refine. It's like, do we need to maybe extend our stop further and extend our targets further, or what? So I'm not sure what we'll do with it, but as long as we can continue being profitable, I think that's the key. Starting out as a new trader, I was so focused on having to make a certain amount of money every day, which absolutely killed me. So I would look at my salary and I'd say, all right, I make this amount of money. That means I make, this amount of money a day. That means I need to make, okay, I have to factor in benefits. So that means I need to make $800 a day to make up exactly for my salary. So I would go into the markets and say, all right, I have to make $800 a day, and I'd start trading, and then I have two losers add up, and then I would just start forcing things like, I have to make the $800 today, so I'm going to go and do this trade and this trade and this trade, and then before I know it, I was down $1,500 on the day. And then I would come in the next day, and I was like, I have to make back the $1,500, and I also have to make back the $800. Otherwise, I'm just sinking slowly, right? And so from the get-go, it was revenge trading. It was, trade anything I could see, just buy it and hope it goes your way. And very quickly I learned that wasn't going to be sustainable. It wasn't going to sustain me. And I say very quickly, but it actually took me like 2 years to get to that point, and a lot of money lost to get to that point. And then that's why I went over to options, because it's more of a, you look at it on a monthly basis. It's a more of a long-term thing. So I was out of that day to day trying to make that certain dollar amount a day. And then I turned into focusing on a percentage per year. And so then when I started focusing on that percentage a year, last year it was like I made 20% on my money. So if I had, I think it was like $20,000 in the account, I only made $4,000 on the money, but I made 20% on the total portfolio. So that became my guiding light, right? And so if I can transfer that skill a little bit to this, instead of focusing on that daily dollar made, focus on the daily actionable things that I traded, the things that I managed well, learn from the mistakes that I made and apply them to the next day, and kind of forget about the money piece, which is really hard to do because the only reason you're doing this is to make money. So it's very counterintuitive to your emotions and everything else. So these video reviews are really helping me. I encourage you, when you start, if you start, to do these, either writing them down or doing them yourself. You don't have to send them to anybody, just listen to them yourself. I find it hugely helpful. So hopefully they're helpful for you too. But I'll just stop you here, and we'll catch up next week. See ya.